Hi all, welcome to Demystifying Accounts. So in this channel, we are going to see in detail each and every concept of accounting. So right from basics till its advanced level, we are going to see each and every topic, and today's most important topic in accounting is depreciation. So we'll see what is depreciation first, and then we'll get into the causes of depreciation and methods of calculating depreciation, and also with the examples to understand it better. So to put in simple words, what is depreciation? So depreciation is the process of allocating the cost of a tangible asset over its useful life. So if you see the definition, the three terms which we can consider is the cost of a tangible asset and useful life. So to put in simple words, if a company is purchasing a machinery and the company is expecting that machinery to work for a period of 5 years, that is a useful life. So the cost of an asset will be taken into consideration, and then the useful life or the machinery which is expected to work in that period, that is a very important thing to note to calculate the depreciation. And why this depreciation is so important to bring it to the books of accounts. So without the depreciation, the real profit and loss of the companies will not be judged, because if you see that example, the company is purchasing a machinery on the date of April, and the next 5 years, after the period of 5 years, with the expected useful life is 5 years for that machinery, and after 5 years the cost or the depreciation should also be included in every year accounting process to know the real profit and loss of the company. And without adding depreciation, the real profit and loss of the company will not be judged. So it is very important to add depreciation in books of accounts, and for that reason we are finding the depreciation cost of the asset. So depreciation is the process of allocating the cost of a tangible asset over its useful life, and depreciation is the decline in asset's value. Say for example, if the company has purchased 10,000 rupees, the cost of an asset is 10,000 rupees, but after 3 years it will not be the same. The 10,000 will not remain the same because it has used for 3 years, and the fourth year definitely there will be some decline in the value of an asset, and that decline value should bring into the accounts real account to know the profit and loss of the company. So that is why we are bringing depreciation. And what are the causes of depreciation? So maybe the depreciation can be caused due to wear and tear, that is due to usage of that machinery over a period of useful life, or the expiration of legal rights, of course. And obsolescence is nothing but out of date. Say for example, if the machinery is of out of date, after 5 years the company has to replace it with a new machinery, right? So that time the real cost of the machinery should be definitely noted down. For that, the depreciation is very, very important. Say for example, the computer has replaced the typewriter. So in order to replace the typewriter and to buy a new computer, definitely the depreciation should be there. So next is abnormal factors. There are so much of abnormal factors like earthquakes and floods that can be caused, and that because of that also the company's machineries can also be damaged. So that the real machinery value or the real cost of an asset should be noted down because of adding depreciation to its value. So next is the most important thing. How can we calculate depreciation, and what are the methods of calculating depreciation? Depreciation is, we can calculate depreciation by two important methods, which is straight line methods, which in simple words we'll call it as SLM method, and written down value method, WDV method. So these are the two major methods which we can calculate depreciation, and it has its own advantage as well as disadvantages, which we'll be discussing it now. So straight line method, what is straight line method? The word itself says it is a straight line, straight approach to the method. So the depreciation is calculated on the original cost of fixed asset. Every time on the first year, from the original cost of the fixed assets only the depreciation will be calculated. But from second year onward, there is a difference between the SLM method as well as WDV method, which is nothing but straight line method and written down value method. But in straight line, the key point to note is the amount of annual depreciation always remains same. The amount of annual depreciation is fixed for all its useful life. So again, I'm telling the amount of annual depreciation is fixed and there will not be any changes in the depreciation amount of every year. Suppose a company is purchasing an asset for an expected useful life of 5 years, then every year the same depreciation account, the amount will be added into the depreciation account. There will not be changes in the depreciation value. But in written down case, if you see what happens every year, the written down, the depreciation amount will differ based on the written down value of the asset, fixed assets. So let's get into the formula to understand it better. Straight line method formula. What is a straight line method? So cost of an asset minus scrap value or the residual value divided by its useful life. So this is called a straight line of calculating depreciation. So suppose if the company's cost of asset is 1 lakh with a scrap value or the residual value, both are same. So scrap value or residual value is 10,000 with a useful life of 10 years, which tells very clearly that the company have the depreciation of 9,000 every year and the SLM method, because cost of an asset 1 lakh minus 10,000 scrap value divided by 10 is 9,000, which is the depreciation. So which is the depreciation amount, and every year till its useful life of 10 years, this depreciation amount remains the same of 9,000 under SLM method. This is very constant. But the next thing is, if you see how to calculate depreciation under WDV method. So WDV method, if a company acquires a machine that cost them 1 lakh, the machine has an expected life of 2 years. Suppose the depreciation rate of the machine is 10%, calculate on WDV method. It is nothing but, if you see, from 1 lakh minus 10,000, that is the first year depreciation would be 10,000, because 1 lakh of 10% is 10,000. But WDV, when we consider the WDV or the written down value at the end of second year, the depreciation amount is not 10,000, because 1 lakh minus 10,000, which is 90,000. So this 10,000 is the reduction of the earlier depreciation. You are deducting the first year depreciation, or you are taking the first year depreciation amount as a part of your second year calculation of WDV. Hence 1 lakh cost of an asset minus 10,000, which is your previous year depreciation, and then 90,000. Out of 90,000, I'm getting 10% is 9,000. So every year your original cost of the asset also changes for WDV method. But in SLM method, the original cost of the method, the original cost of the asset will be taken into fixed, and hence the depreciation will also be taken into a fixed amount. But in WDV, every year your depreciation will be changed, because based on the written down value calculation. And if suppose third year, what will be the WDV method on the third year? So kindly comment, so that based on your comments we'll reply back. And hence I hope this video is useful for you to understand it better about the depreciation process. And thanks all for watching. If you really like the analysis, kindly do the like, share and subscribe the channel. Thanks all for watching.